we came into this year, if the administration hadn't changed, things were looking good. Soft landing in the US, Fed cutting interest rates, AI optimism, inflation coming down. It was looking like a pretty good environment after 2 strong years, but now we've got this extra wave of uncertainty and with the European announcement, but underlying it is, we know Europe's outperformed so far this year, we know European banks have had a great couple of years, and we know that underlying it with the election in Germany, with the pickup in credit growth, with the ECB being the most aggressive easing central bank over 2025, Europe is turning into a better story than we've seen for a while.
I hate to be naive and look at my glass of water, which is roughly half full, it's slightly more than half full at the moment, but I'm going to do it. The improvements we're seeing in efficiency stateside via Doge, and there's no doubt about it, there will be a lot of cost cutting there, plus the anger of Trump's administration towards Europe, are these going to actually act as lightning rods for Europe to do the right thing, have a form of autarky, boost its own technology, protect its own industry and fight fire with fire? I.e., I'm saying net-net, could actually Europe benefit in the medium to long term? Short term, it's going to be painful from what we're seeing in this administration.
Well, I think so. Anything that knocks the complacency out of Europe is going to be a good thing over the longer term. And we're seeing that with the German election. We're seeing that with Keir Starmer's announcement about increased defence spending. We can see that Europe wants to stand more independently, and that's going to be a good thing over the medium term. And in the shorter term, like the tariff thing will be bad. Europe is a heavily export-dependent region, much more export-dependent than the United States is. So it is a net loser from any tariffs. But underlying it, there are some, after such a period of bad news, remember, the German economy has not grown for 5 years. After such a bad period of bad news, we are starting to see some glimmers coming out of Europe, and I think the flagship for that has been the performance of European banks.
Andrew, are you over-egging the tariff threat in Europe? Because every other CEO we speak to says, oh, well, it doesn't touch the sides for us because we re-geared our supply chain. We don't have product crossing borders anymore. 2016, 17, 18 and the other years happened under the Trump administration. So they took that news flow and they changed, re-geared supply chains so they were not prone to tariff threats.
Well, and I think that's right. Like, we know that small tariffs, small changes in tariffs at the macro level don't have a big impact. But 25%, that's something else. That will have an impact. It will impact currency markets. It will impact economies. And if, say, we take President Trump literally, which is always a challenging thing to do, but we take him literally and he does what he said he was going to do in the campaign, this is the sort of event that would generate a global recession. So that's the risk. Seems unlikely because we think Trump talks more than he acts, but to the extent that these things come through, they have to be negatives.